Welcome back to The Explainer. I'm so glad you're joining us today because we are getting into something seriously fascinating. We're taking a highly structured, totally data-driven look at a company that's actively trying to rewrite the rules of real estate and consumer finance. We're talking about Rocket Companies. We're going to unpack their massive strategic shifts and that really eye-opening Q1 2026 financial performance. Whether you've been watching this sector for years or you're just curious about how tech is shaking up traditional mortgage lending, we're going to break the whole thing down step by step. Let's get right into it.
Okay, let's dive right in. Here's our roadmap. First, we'll look at the massive fragmented market opportunity. Then check out the AI-powered tech ecosystem they're building. After that, we'll dig into the Q1 2026 financial results, compare direct versus partner performance, and wrap up with leadership and some recent market buzz.
All right, part one, massive market, fragmented opportunity. To really get what Rocket's playbook is all about, we've got to zoom out for a second. $2 trillion. I mean, that is a massive number, right? According to their Q1 2026 presentation, that's the estimated size of the total addressable home ownership market. We're talking about an almost unimaginable amount of money moving through the housing lifecycle, all sitting inside a broader $31 trillion gross domestic product. But, just knowing the size of the pie is only half the story. It's how that pie is sliced up that really shows us the opportunity here. So the crucial point is this massive contrast. The top 10 players, they only hold about 23% of mortgage originations. That leaves a whopping 77% totally scattered across the rest of the market. It's like a giant puzzle with a million tiny pieces. This just shows how highly fragmented the lending landscape actually is. If you're a company with serious scale, well, this isn't just a market. It's an absolutely massive growth runway. It's perfectly set up for a dominant tech-first player to just swoop in and consolidate market share.
Moving on to part two, the AI-powered tech ecosystem. So now that we've got a handle on the macro-level situation, let's look at the tech solution Rocket is engineering. Actually, if you're still thinking of them as just your standard traditional mortgage originator, you might want to scratch that. They are building out a fully integrated end-to-end ecosystem. We're talking front-end home search, personal finance management, all the way down to the actual mortgage origination, servicing, and some really complex app dev and data platforms. The whole goal? To basically own the entire homeownership lifecycle, all in one seamless digital space.
Now, what's really interesting about this is how they're putting the pedal to the metal using artificial intelligence. They've built this platform called Rocket Logic. It's spearheaded by their Chief Technology Officer, Sean Malhotra, and it's baked right into their system. Why? To completely simplify and automate the whole road to homeownership, which, let's be honest, has historically been pretty clunky and frustrating. It's all about stripping away that friction for the consumer while creating some massive, and I mean massive, operational efficiencies on the back end.
But hey, you and I both know the slickest tech in the world means literally nothing if nobody's using it. You need a distribution engine. And Rocket? They've got incredible scale. They're seeing 12 million monthly active users engaging in this ecosystem. Plus, they've got this massive network of 340,000 agents. So they haven't just built the digital plumbing, they've actually managed to route millions of highly motivated clients right through it.
Okay, let's hit part three. Q1 2026 financial results. We've talked market size, we've talked tech. Now let's get into the hard numbers, because they tell a story of a completely wild year-over-year turnaround. Get this, in Q1 of 2025, Rocket was looking at a GAAP net loss of $212 million. Yikes, right? But fast forward just 1 year to Q1 2026, and they completely flipped the script to a positive $297 million in net income. Adjusted EBITDA, that jumped from $169 million to a staggering $738 million. And just look at the top line. Total net revenue absolutely exploded, from $1.1 billion to over $2.9 billion. And these numbers brilliantly illustrate just how crazy that velocity is. More than doubling your total net revenue in a 12-month span? I mean, that's just massive validation that this whole tech ecosystem strategy we were just talking about is really catching fire and working.
But look, explosive growth can be super fragile if you don't have the cash to back it up. Luckily for Rocket, they're basically operating wearing financial armor. As of March 2026, they reported a totally robust $9.4 billion total liquidity position, which includes $2.7 billion in cash and cash equivalents. Throw in a total equity of over $23 billion, and you've got this fortress of a balance sheet. It gives them this incredible superpower to weather crazy economic cycles, ride out interest rate bumps, and just keep pouring money into their AI and ecosystem expansion without breaking a sweat. All right, moving on to part 4, direct versus partner performance. Let's see how this all builds together, because we really need to know exactly where that capital is flowing from. Now, their partner network segment did great, bringing in a very solid $300 million in revenue and $144 million contribution margin. But honestly, it is crystal clear who the heavyweight champion is here. The direct-to-consumer segment is the undisputed core engine of this company. We're talking over $2.2 billion in revenue and pulling in an eye-watering $1.14 billion contribution margin. They are maintaining a highly profitable direct relationship with the everyday homebuyer. Which brings us to part 5, leadership and market buzz. We've looked at the market, the tech, and the numbers, but what about the humans actually steering the ship? Executing a massive turnaround and scaling out an AI platform like this takes some seriously steady hands. The company is led by CEO Varun Krishna, and he's got a deep bench with him, including the president of Rocket Mortgage, Jay Bray, and CFO Brian Brown. Their stated mission is to help everyone home, and it's really on their collective shoulders to navigate this notoriously bumpy real estate market. Just to humanize all this corporate data for a second, their internal culture is built around what they call their ISMs. Basically, it's 16 guiding philosophies that shape how they make decisions every single day. The big standout among them? A simple motto: do the right thing. It's a pretty cool glimpse into the cultural heartbeat that's ultimately driving those massive numbers we just looked at. Now, taking a step back to look at the market itself, there is this fascinating retail trading phenomenon surrounding Rocket stock. They've actually gone through periods of being labeled a meme stock, catching these crazy waves of retail momentum back in 2021 and again recently in 2025. In the trading community, they're often grouped into this fun acronym called the DORKs, which stands for Krispy Kreme, Open Door, Rocket, and Kohl's. It's a really unique dynamic. It definitely adds this extra layer of volatility and retail visibility in the public markets that's totally separate from their actual fundamental business performance. So, what does this all mean? Well, it leaves us with one really big question to chew on. Armed with a literal fortress of $9.4 billion in liquidity, a rapidly growing ecosystem of 12 million users, and a seriously cutting-edge AI platform in Rocket Logic, can Rocket companies actually conquer and consolidate that incredibly fragmented $2 trillion homeownership market? I mean, the Q1 2026 data definitely shows they are well on their way, but as we know, real estate is always shifting. Hopefully, this explainer helped you really grasp what's going on under the hood with their strategy. Keep a close eye on this one for sure. Thanks so much for hanging out and learning with me today.